afternoon, traders. I'm George Troop filling in for Neil Wilson. Hope you're all having a fantastic weekend. What a remarkable week it's been in the markets. Looking back, we had crypto prices tumbling yet again, falling to new lows for the first time in months. The return of meme stocks 2.0, GameStop, AMC, some of the most traded assets on the indices last week, hitting new highs for the month. Looking back to those all-time highs they had back at the start of the year, starting to get a real buzz back on Reddit amongst day traders there. Data-wise, we had some positive news coming from the US in terms of unemployment. First-time unemployment claims at a low for the first time since the coronavirus pandemic began. More worrying signs in terms of inflation. With some core data coming out on Friday, higher year on year than expected, could be something that the Fed is looking at. Time now, however, to turn our attention onto the week ahead. What have we got in store? The big one is, of course, non-farm payrolls coming up at the end of the week over in the US. This key jobs market metric, usually a bit of a market mover, a lot of attention there, seeing how the recovery is taking place. Very key indication coming up on Friday. April's numbers clocked in at 266,000 jobs created, slightly worse than expected, but buoyed by rapid economic growth, we could be looking at higher. At the end of April, 9.8 million Americans were still unemployed. Along with the vaccine progress, reopening, that wedge is starting to narrow. Labor demand, labor supply realigning, not quite level yet. It will be interesting to see this figure coming out on Friday and see how the markets react. As I mentioned before, inflation is starting to come into focus. Will the Fed react? They'll of course be keeping an eye on this jobs report as well. So if there's positive signs for employment improving, they might be less likely to ease their policy for the long run. Other than that, we also have OPEC JMMC meetings slated for June the 1st. Their mission to protect oil markets, strengthening prices, and cutting production will continue. We've seen a bit of a rally in the oil markets this last week or two in oil prices, with raising optimism surrounding international reopening, summer travel plans. That price of oil has been starting to rise. OPEC will, of course, still be worried about the coronavirus ravaging India, the third largest oil importer. That will no doubt be heavily weighing on their mind. And there's still further cuts to come. We are looking at that agreement from April to bring 2.1 million barrels per day. Cuts easing back to 5.6 million barrels per day. So it'll be interesting to see what happens there. We will, of course, bring you updates as they come out. Otherwise, attention also on the Reserve Bank of Australia. They will have an announcement. Cash rate decision is due. Chances are nothing momentous happening there, but it's still interesting to keep an eye on. Their cash rate has remained at 0.1% since November 2020, and there's no real indication of a rise or a hike for the next few years based on their previous statements, but will still be interesting to see what the RBA has to say later next week. In terms of economic data, we've got all the usuals. Oil inventories on Thursday, as well as some unemployment data, this non-farm payrolls on Friday, and earnings, of course. We've got Zoom, HP, and Slack to look forward to next week as well. So we will, of course, bring you all the updates with our usual X-ray videos. Thanks very much for watching. See you soon.